Welcome back, everyone. Not all retail is created equal, as we've seen from the divergence in earnings this past quarter, and then, of course, Target's dismal forward guidance. But let's talk more about what's happening with retailers with Dana Telsey, Telsey Advisory Group's CEO and Chief Research Officer. So, Dana, as you're looking at what's happening in the retail space, you're seeing some of these luxury brands like a Ralph Lauren doing well, but then you're seeing more concern from Walmart and some of these other stores. What should we be keeping an eye on at both ends of the spectrum?
I think it's different in terms of the bifurcation of household income level. But really, when you look at Walmart and Target, it is not really sales that are the issue. It's definitely much more about the fact of the supply chain headwinds and the consumers refocusing, whether it's on essentials, food and beverage and beauty, while items like home or athleisure wear have been a little bit slower. Supply chain has been more of the headwinds. It costs more money. There's more transportation costs. And now they're left with excess inventory where the promotional pressure isn't just going to come from the discounters. But you take a look at companies out there like a Gap, for example, and you have Old Navy promoting. We're going into a more promotional environment because inventory levels have bulked up. But it's different at the high end than what you're getting at the low end.
Dana, what are you seeing consumer spending-wise? Are you seeing consumers begin to moderate their spending, or are you expecting them to begin to moderate their spending over the coming months?
I think at the lower end, we've begun to see that. Whether it's household incomes of $55,000 or lower, the headwinds of higher fuel, higher grocery prices are definitely an impact right now. Well, at the higher end, the more newness and innovation you're giving them, they're spending money on wedding dresses or dresses for graduations or birthday parties. The reopening is here. You look at the numbers that just were reported by Oxford Industries, Tommy Bahama and Lilly Pulitzer. They're benefiting from the reopening. You look at even some of the women's apparel retailers where household incomes of their customers are $100,000 plus at a J. Jill or Chico's, and even look at Nordstrom's and Macy's. They're seeing those categories perform. And don't forget beauty. You're seeing Ulta and the strength in prestige makeup exceed mass makeup for the first time in a while.
And I want to talk to you about margins, because obviously we've seen some companies, they're seeing their margins sort of starting to dissipate as some of these input costs start to add up throughout the supply chain. Are there some companies that you see that are well positioned in terms of being able to have solid margin lines?
You are seeing some companies with solid margins. Look at the beauty category with Ulta, solid margins. You look at Levi's, solid margins in terms of what they're delivering. And you look at the upper end, you look at LVMH, and they have solid margins. So yes, a lot of the companies, the headwinds of some of the expenses they had pre-COVID, they don't have today. So they're managing better, even with an environment where sales may not be at the same level. But I look at brand, I look at inventory levels, and I look at innovation as being able to give you the upbeat outlook for margins.
Dana, you mentioned the fact that the supply chain issues are starting to, I guess at least in some cases, mitigate a bit. But when you compare it to what we saw pre-pandemic, when do you see the supply chain getting back to those more normal levels?
So let me tell you, what used to be normal is 30 days in terms of coming from China over here. It literally expanded to 70 days at the height of the worst during the supply chain headwinds. For the most part, it's back to 45 to 50 days now. But I will tell you, companies are not thinking that it's going to remain this way. There still may be more volatility. I think it's going to last with these supply chain headwinds basically through the end of the year, but lapping the freight expenses in the second half of the year certainly will help to manage expenses better and help to manage margins better.
So, Dana, I want to talk about the future of retail. Obviously, you mentioned things like innovation. We saw Amazon launching its first physical clothing store. What are you looking at in terms of the future of where retail goes, keeping in mind how consumer tastes have changed and what might be the next step?
I think there's a lot of interesting things about retail lately. When you think about the personalization efforts from all the data that companies have about their core consumers, that informs them in terms of what product to make. And not only does it do that, but the access to the data you have on that customer allows you to communicate with them more real time. Physical and digital, it's not one or the other, it's both. Because one of the things you're seeing is you buy online, pick up in the store, it drives an attachment sale. But engaging with your consumer, knowing what they want, giving them the optionality to spend what they want when they want, and creating almost exclusive product for them is engaging. And one of the things you're seeing today is It's not just one category. You have beauty, you have apparel, you have home. I think the variation of categories to give individuality and frankly to give consumers the wow of what they're buying is more invigorating today than what it was in the past. Plus the fact that you have these smaller brands that are first coming to the forefront. And I think that's giving consumers more choice than ever before. So whether it's on, we used to believe that it was only all about product, price, and place in terms of capturing the consumer. But today, companies have adjusted their processes to include purpose, putting the consumer, the community, and their employees first to drive profit. And I think that's kind of the guidance for the reinvention of retail as we move through over the next 3 to 5 years.
Dana, what about department stores? Where do they fit in when it comes to the future of retail? Because we got the news this week regarding Kohl's. Obviously, that company has been struggling. They apparently reached a potential deal here with the franchise group, at least entering exclusive talks with that company. When you take a look at this sector, there seems to be clear winners and losers. But how do you see a name like Kohl's evolving and, I guess, potentially shifting or turning around their business?
It's going to be very interesting to see the outcome of Kohl's. One of the things that Michelle Gass has done is she's brought in more brands because even her core consumer is aware of and knows the brands. The Sephora innovation, the shop and shop they have, driving a younger customer, benefiting both Sephora and Kohl's. Take a look at what they've done with Active because that's what their core consumer and their children are wearing. So I think it's a more relevant brand today, Kohl's was, than in the past. And now it's harnessing all those brands and what that activity could drive, hopefully in terms of higher traffic, into delivering higher profits. So there's an opportunity out there in order to continue to manage those operating margins to a higher level.
And Dana, in terms of some perhaps mergers and acquisitions or partnerships that you think could really benefit from this environment, what would you be keeping an eye on?
Take a look at what we've been seeing out there so far. You're seeing category extensions. You look at Macy's and Toys R Us, Macy's and Pandora. You look what Nordstrom has done with Nordstrom and ASOS, and you take a look at what a Lululemon has done. We're buying Mirror, which gives them an activity in terms of working out to sell their clothing too. So I think the partnerships are going to be more wide-ranging and wide-reaching to expand the categories that a typical brand is in, and also to be able to use the physical footprint in a more productive manner.
Dana Telsey, CEO of Telsey Advisory Group. Thanks so much for joining us.
Thank you for having me.